Well, last week we had an announcement on those RVOs and a lot of excitement in the biofuel community, I think, in North America. Obviously, from a soybean perspective, we've seen soybean oil on a real tear because of that news. But what does all this mean for canola? And of course, that's what we talk about here on RealAg Radio. And we'll get into it with Chris Vervaet. He is the head of COPA. How are we doing today, Chris?
Doing great. Thanks for having me, Shaun.
Hey, yeah, great to chat with you. So, I guess overall, the RVO number was actually above. If you do some of the calculations, we're actually higher than what some of the expectations were. I guess from a canola perspective in your membership in Canada, are you satisfied with what you heard last week?
Well, there's always details to unpack, and I look forward to doing a little bit of that with you today. But I think if we zoom out and look at this high level, we are very encouraged to see what was proposed last week by the EPA. Those volumes that were proposed better align with the actual reality of production capacity for biomass-based diesel in the United States. And that's something that industry has been asking for quite some time. So to see the proposed rule actually reflect reality, again, is very encouraging, I think, for fuel producers and for feedstock providers alike.
Now, Canadian canola is considered a domestic feedstock, but it looks like there's a little bit of a catch here. In terms of the it's like 50% of the RIN value. Explain that to people.
Yeah, so this is, again, looking at some of the details behind those large RVOs. We do see a new requirement being spelled out or being proposed on what value of a RIN. And a RIN is that credit that is traded within the renewable fuel standard marketplace in the United States. That's what fuel producers want. They want to see that RIN. They want to see a maximum RIN value. What's being proposed in the rule is that the RIN value for any imported fuel or any fuel made from imported feedstock would have a 50% haircut on that RIN value. So from our perspective, Shaun, that is unfortunate. Again, notwithstanding my comment that at a high level, seeing these RVOs be as large as they are is very good news. But this is the unfortunate piece of what is being proposed.
Does that disadvantage Canadian processors or the crush industry in Canada?
Yeah, it does. So if you take a 50% haircut on these credit values, and again, it's those credit values that the fuel producers want. That is what they're all after, to maximize those credit values. So if we can't, as a foreign feedstock, generate the same credit value for fuels produced from Canadian canola versus domestic canola or domestic soybeans, that is a significant competitive disadvantage for us.
But because the RVO is I guess a number above what was expected, you think there's going to be enough demand that it's still going to pull some of that Canadian product into the U.S. system?
Yeah, I think that's part of the story. I think there's also room for optimism, just again, looking at a higher level.
Yeah.
When you see the volumes that are being proposed, again, aligning with what production capacity is in the States, that's going to, the way it's currently proposed, draw more domestic feedstock like soybean oil, for example, perhaps into the fuel sector, which creates just more opportunity for other vegetable oils to perhaps fill some gaps. So there's going to be room for canola oil to maybe take a bigger piece of the market share in the food business, for example. And I want to emphasize that, and keep using the same wording, right? This is a proposed rule. This is not cemented yet. There's still opportunity from our perspective to see some changes to how they might look at Canadian canola, for example. And the rule that was proposed last Friday, the rule itself, Shaun, is 290 pages long. And then you look into the details of how they came up with these numbers. That's an additional 400 pages. So we're still reading the details, but there's some, let's call it encouraging language in the rule itself with regards to direct mention of Canadian canola, the opportunities that it provides for fuel producers in the United States. We have a lot more supply to offer in the years ahead. We're a predictable trading partner. So these are all arguments that we're going to be looking to make before this rule gets finalized, with the hope that we do see canola treated on a level playing field.
Yeah, one of the observations or takeaways that, I've kind of asked a lot of people about is the fact that, because of the acre differences, canola is one of the crops where there is a big acre difference, and it's in Canada's favor compared to the U.S. Now, there's a lot of opportunities for U.S. grown canola going forward, uh, especially from a genetic standpoint, winters or springs. But having the ability to pull Canadian canola or Canadian oil into the U.S. market, it gives the U.S. acre for canola some scale in this game, right? Where you're now not talking about 1-2 million acres. You're talking about something that's over 20.
Absolutely. And the way that we view this, and I think many of our US partners in agriculture view it the same way, um, there's a real opportunity here on both sides of the border when it comes to biofuel policy development to take what I like to call a Fortress North America approach, Sean. So these types of policies are being developed on both sides of the border with an intention to help support agriculture, to support energy security, to support jobs, value added processing, whether that's fuel or feedstock processing. These are all part of why these types of policies and regulations are being created, again, between Canada and the United States. So our hope, and we start to see this from some of the language and the positions from our US partners as well, is to take more of a North America approach, right? Whether it's on feedstock or fuels. But for the purposes of our conversation today, when I talk about that concept of North America or Fortress North America, for example, we believe there's opportunity there for Canadian canola to carve out some type of an exemption or perhaps a change to the proposed rule that, again, allows us to compete on a level playing field.
Yeah, and of course, 45Z is something that you've been working on a lot too, but we still don't have all that ironed out as well, especially relative to those carbon intensity scoring.
Yeah, that's a moving target, both technically, like you flag from a carbon intensity perspective, but also 45Z and changes to that particular provision in the IRA is a live discussion, literally, as we speak within the Senate as part of that tax reconciliation package that's moving through the system. So there's also some changes coming there that we are very mindful of and keeping abreast on.
Now, Chris, I I I get a whole bunch of emails on both sides of the issue when it comes to some of these biofuel programs. I've always said there's a difference in the attitude towards biofuels in the U.S. versus Canada, and I think we've even done some research work I think that sheds light on some of that. I had a piece of feedback. I think I read it on yesterday's show where somebody said, "Okay, like I get it, but it just feels like market interference. Like just we're getting in the middle of supply and demand. Why are some of these programs and incentives, whether tax credits or other mechanisms, why are they important for the biofuel industry?"
Yeah, fundamentally, they're important because when we talk about biofuels, it's about transitioning, right? So you're transitioning from fossil fuels to something that is renewable, better for the environment. And often when you are transitioning from fuel sources or diversifying is perhaps the better word to use, fuel sources, sometimes you do need a little bit more encouragement and incentives to do that. So that's really why you need to see levels of regulation, policy, and incentives to help drive the market.
Yeah. So from your perspective, there's some things you'd like to see maybe altered. There's also definitely some positives. From your perspective, representing the Canadian crushers, do you see last week's news as a net positive or a net negative?
Good question. Again, we're still combing through all the details, but I'll go back to where we started our conversation at that high level. That proposed volume for 2026, that's 5.6 billion gallons from where it was or where it is today, which is just north of 3 billion gallons. that is a net positive. There's almost, well, there's consensus really that this is something that we view as a positive step, those volumes being proposed at the levels that they are.
Yeah, and just everybody's information, the expectation, the ask from the industry was 5.25.
That's right.
Right? So kind of blew through that. In Wall Street terms, blew away earnings, and I think there's a lot of positivity.
Yeah, and maybe really to put it into terms that I think everyone can understand, when you see these types of volumes being proposed, it creates demand. It creates demand for soybean oil, it creates demand for canola oil, it creates demand for all feedstock. And that presents all kinds of interesting opportunities for our value chain.
Hey, Chris, before I let you go, any other issues, there has to be, that you want to bring up from the crusher standpoint? What's going on in the market?
Yeah, I think it's worth noting that we are obviously keeping a very close eye on how things evolve in the United States. We look forward to working with our U.S. partners on the details of the RVO, where we hope things will land on 45Z as well. But we can't lose sight of our own domestic market, right? So this is something that is absolutely critical, that we continue to see a strong demand signal federally. So we're encouraged to see that the clean fuel regulation does have life. That's something that we have been advocating for over the last, well, gosh, for many years now, just to make sure that that type of demand signal stays in place. So that's a positive, but there's still some other details that need to be sorted out in our own backyard on biofuel policy for sure. We need that to be more durable. So regardless of political stripe and the next election cycle, it's critical to see that type of policy stay in place. And then we need to sort out some of the details on, well, what kind of feedstock is going to be used to service the Canadian biofuel market. Again, we really support a North American approach. The way our US partners are talking about feedstock, they call it a ring fence, right, for North America feedstock.
Yeah.
We think that makes sense in the context of a Canadian biofuel program as well. Again, Fortress North America, ring
Yep.
fence, whatever you want to call it, but these programs should be designed, must be designed to really help agriculture.
A lot of times we talk about supply chain integration, right? And I've talked a lot about complementary supply
Yeah.
chains. And, a lot of times we talk about that from a beef and pork perspective, but I think it's lost on a lot of people how much both countries rely on each other when it comes to biofuels, whether it's the feedstock, it's the processing. Canada's the largest purchaser of U.S. ethanol. Of course, Canadian canola is very critical to the future of bio-based diesel in the U.S. is one example. So again, I think it's just, it proves itself. Trade can work. And we've talked a lot about Fortress North America here too. So the audience here gets it very much.
Well, I'm glad to hear that. And maybe just to build on that last point you made, literally millions of dollars worth of feedstock and finished fuels crisscross the border every day between the US and Canada. So yeah, that Fortress North America ring fence approach to biofuels makes so much sense.
Great stuff. Hey, Chris, thanks a lot for joining us here today. I know you squeezed us in. You got a bunch of meetings going on in Winnipeg. I really do appreciate it.
Yeah, my pleasure. Thanks for the opportunity.
For the latest ag news, agronomic advice, and more, check out realagriculture.com and RealAg Radio.